Hi there, you are at the Uniswap Wyckoff technical analysis session, and we'll quickly look at the charts and see what the price actions are telling us. So last week we asked the question whether we have seen the buying climax already or not, because for PSY period, the preliminary supply period is not always just a bunch of upward candles. So if you are not familiar with the white colors, in other charts you usually see them green. The reason I change it to white is because we can show it to more people with different color sensitivity of their eyes. So we can all differentiate through this, and hopefully this helps and explains why I turned it to white. So basically, over the past few weeks, we see a different style of PSY preliminary supply that's a mix of upward and downward movements. So that's completely normal. And while this has been happening, the price has been staying above this upward trend line that started back in late June. So as of now, the climb is still going on, and if we look at this triangle over here, we are getting very close to a breakout, a price breakout. So either the price falls outside of this upward support level, meaning it may trade sideways for a longer period, or may even come down. But if it comes down, that means the buying climax was already there. It would be a bit disappointing comparing the other two distribution cycles back in March 2024 as well as December 2024. So hopefully that's not the case, and if it goes sideways, there's still a chance that it rebound and show us a buying climax higher than the current level, or at least higher than, or closing higher than the light blue key level of $11.20. Hopefully above the blue key level of $12 as well. So we touch on the point that at the beginning of September, that's where the key decision has to come. The bulls and the bears basically have to fight their final battle now. There are just two candlesticks away from this tip. So either we are going to see a fall down, or going up towards challenging the blue level at $12. For the time being, looking at the volume, the upward volume has been a bit higher than the red, while or why I say a bit, not a lot, because if you look at the volume bars, even the candlesticks, it seems like those going up is way more than those coming down. But there's one tricky part, especially the candlestick last week. Looking at this long wick at the top is a bit interesting, because the price broke above this light blue key level, even above the $12 key level that I mentioned, but immediately it got pushed back down to below both key levels. So this higher volume includes quite a bit of selling over here. So that's why it may be a warning sign that there are some people that are not ready for the price to get to that level, or maybe some profit taking, we're not sure. If we look at the previous two cycles, it may be some people that got in, maybe they try to catch the second wave of the LPSY, they got in, and then immediately the price dropped, and they didn't sell here as well, and the price come down again, and that's why they sell over here. Those can be one group of people, or the other group that catch the rebound over here, but there was no chance for them to sell. Similarly, there are multiple reasons for that to happen. Hopefully it's not the whales offloading to whoever FOMOing in, because that's a bit too early for a distribution to happen that way. Anyway, like I said, the uptrend seems to be continuing as long as the price is finding support along this dashed line. If not, if it really trades sideways, this dashed line will become a resistant line for the next move upwards, even if the price is going to go to a buying climax using a longer path, meaning reaching the buying climax at a later date near the year end instead of beginning of fourth quarter. So that's the macro read. Let's go to the micro. So here, last time we already put in this tag, the upthrust and automatic reaction. So this time we see that an LPSY, the last point of supply, has already happened, and the price is trying to stay somewhere around the level where the last automatic reaction was. So this is an AR2, that's how I call it, is the price retracement from the upthrust, where the AR is the price retracement from the buying climax. So I'm trying to use different but close enough terminology, so hopefully that helps you understand what I mean. So a possibility of the price coming back to the green level or even the white dashed line is a phase D sign of weakness. So you can forget about the phase, that's meaning the price may come down to show us the second sign of weakness, so one that's after the upthrust. If the weekly is really coming to the dashed line, that's completely possible. So if I show the dashed line to, not that I want it to be seen at the daily. So currently the price is still over there. If it really happens and comes down to show us a sign of weakness, that means it's going to break below the line, like I said, the negative scenario, or like less positive scenario. So it may take a longer period to reach the weekly time frame buying climax. If it continues to stay above this trend line, much like the last 4 days, including today, that means there is a chance that this may happen later, but instead an upthrust of the distribution is going to happen in the daily time frame. So this, if it happens, that means it would be where the buying climax is in the weekly. So in the weekly time frame is the buying climax, while in the daily it will be an upthrust of the distribution, because they are on different trading time windows, and what happens here, the stages won't be exactly the same as the other. So again here, just quick check whether a squeeze is happening. A squeeze is not there yet, but it's building up. So the purple is showing signs. So the like the staircase lines. So let me close these so it's easier for you to see. The staircase lines are coming closer to the smoother curves. So when that happens, when they get close enough, there would be a likely chance of a big price move, much like what happened here. You see that happened, and there was a surge. It doesn't only go up, it can come down as well. So the squeeze happened here, and the price soon dropped all the way to almost the bottom. So as of now, it hasn't happened yet, but it's building up. Let's hope the price to stay on track along this dashed line upwards, and if it really happens in a way that it goes sideways or come down a little, it's still not too bad. It's still possible to trade sideways between the green and the light blue key levels. I don't see, and it's like I would say less than 10% chance that it goes below the green, because that's a level where the this surge started, and it will break the Wyckoff distribution pattern if it does. So that's why I say it's less likely. So let's say this has a 50% chance sideways, trading sideways. Let's borrow this. Continue, meaning PSY continue is like 35% chance, and the remaining 15% return I can't type suddenly, turn to green. I would say it's not moving. Yep, 15% chance. So let's put it this way. That's what I'm seeing right now. So let's hope for an upwards of the distribution in the daily chart, and the buying climax in the weekly. So let's lock this, and thanks for joining me for this session. I'll move on to 8 next. See you.